What's up, everyone? Welcome to episode 26 of our trade recap and market analysis series. And let's get straight into it. Today was a pretty good day in terms of analysis. Unfortunately, we did get wicked down on this trade once again, which does show that there may be more things to do with execution and stop loss placement rather than our analysis, and that our analysis was actually very good. Like, we literally got almost a sniper area of entry for these longs right here. But assuming we were in this trade, which we did assume, even though we did get stopped out, we would have taken profit around these highs right here. And let's talk about why this trade came to the way it was and the market analysis that set everything up for today. So, just quickly looking at the 1 hour chart, we have all these liquidity levels. We have our gap fill area over here, main liquidity there. We have further liquidity up here. We have a 1 hour here, a 2 hour here, and we even have a 30-minute zone here, all piled with lots of liquidity both above and below. So we need a factor that can help us differentiate whether the price is going to go down or up. And typically to do this, we look at overall market structure, right? And how does market structure look in the smaller time frame? It looks quite bearish, right? But if we take a zoom out on the market, perhaps the 4 hour, take a look at it now. We are creating higher lows. We're not creating lower highs. Now, potentially you could consider this a mixture of both, right? You may consider this a long-term, I don't even know what they call it, maybe wedge pattern. We don't look at patterns, but I'm just trying to call it what some other traders do. We're creating this sort of compression within the market, which means that we can trade from level to level pretty nicely from where we're at. Now, in this day, right, we already knew a big portion of our analysis, right? Because what we predicted prior, which was publicly announced in the Discord, which we expected price to come up here and then reject. And in the text in Discord, we said that this was our primary outcome, right? And that was the thing that exactly happened. I took it out, but what happened here demonstrated that 30-minute rejection and overall idea. And you may be wondering why this idea came to fruition, right? It was from simple POC, right? Now, if you look at it, POC is down at these levels, right? At the 1 hour. But if we zoom back to where we were at when we were trading, right? Look where POC was. POC was up near these liquidity levels, right? And even prior to that, if you just take if you just take a look, right, where our 30-minute was placed, our 30-minute was placed right here approximately, right? And from that portion, we essentially just validated that overall idea, right? Now, what our ideals for New York session was that we already made this large move downwards towards our liquidity and 1 hour, right? And as you can see, this area is also a high volume node as compared to the rest of the market. From what I see, we have 3 high volume nodes. The area with the POC, down here, and over here as well, where we see a small high volume node. Now, what does this tell you? It tells us that this zone, our previous 30-minute zone, and this zone over here are very essential pieces of the market that are going to be key factors in the movement that the market makes. And from looking at this POC, we see that so much volume is up at these high volume node areas, right? And since we are so essentially extended away from the mean, you can consider this somewhat a mean reversion trade, right? And with high volume nodes, you can consider it as an area of reversal as well. So, and we come into an area of reversal. There is perfect auction conditions above. There is lots of liquidity above. We did not sweep any liquidity during New York session prior to this down move, right? We just swept this lower liquidity, which is even better exemplified by ES, right? On ES, we literally, like, I'll show you. If you just hop onto the 1 hour chart. Yeah, that's honestly quite perfect as to what I'm seeing on ES. ES would have been the structure building characteristic for today, right? Prior to New York session, we were just going in. During New York session, we saw expansion towards the downside. There were no liquidity sweeps done at this point, right? But then we came down to this liquidity level and this 1 hour, right? As you know, POC is still around these levels here, right? And I can show you that right now. Hold on. If you go into POC and go prior to this, around this area, just take a look at that. Look where our POC is and look where we made our highs. Quite literally around this POC level. Maybe if we go earlier, it can be even, yeah, literally this overall area is very essential for the sell side and would be an area that we would revert to, especially from another high volume node like such. That was literally a textbook analysis at this point, right? I don't see any other way that the market could go unless we did break past these high volume area, then potentially we could retrace back into here where we could have taken more shorts. But the highest probability thing that we expected to happen happened as we expected. Okay. Now that sets the stage up for this trade, right? Now that we've given you some basic market context as to where the POC is, essentially driving us for a idea that once this liquidity gets swept, if we see any long or buyer momentum and aggression start filling in and with clear confirmation that that is there, we can definitely play off a reversion and reversal play. And that's exactly what we did here today. So, all that being said, on the smaller time frames, like the 5 minute, let's go on to the 15 minutes so it's easier to understand, and then let's go on to the 5 minute, right? Right after market open and even before market open, we have just been continuing going down and down and down and down with a good amount of momentum as well. And we've created this nice trend line, and we clearly show signs that we want to continue lower. That is completely fine. We trade with the markets rather than forcing the markets to trade with us, because that will never happen. So we couldn't find any shorts at this point, maybe potentially here, but we were not actively looking for positions during this time, right? And after that time, let's take a look at what happened, right? We saw so much continuous selling pressure, even with the introduction of buyers, as demonstrated by these wicks right here. Sellers just continue to push the price down and down and down and down and down until this area, right? And these lows right here are where liquidity on ES was swept right here. Now, we are not looking at the longs quite yet, even if we made some short-term retracement like this, because there is a 15-minute gap right there, right? 15-minute fair value gap as demonstrated there. And easily with that 15-minute gap being there, we can definitely consider it as this being a retracement, right? We need more confirmation if we're going to enter long. And although this is a big sign that aligns with our long-term bias, we do need to wait for more confirmation and look at order flow as well for us to receive that confirmation, right? So with this initial move up, we did create a 5-minute fair value gap on NQ, right? And we did start to retrace into it like we wanted it. Now, the last step for us to enter into this trade is a barrier and confirmation signals on order flow, right? So this was a point where the initial move happened, and now we're stalling back and making a short retracement. What do we see happen? We see this nice barrier start to form, and we wait until the barrier gets tapped into, or we see a reversal from the relative area, right? Some quick price action confirmation on the barrier. And we see that right there. Once you start seeing that happen, and with the introduction of so many icebergs, we want to essentially aim and target the longs, right? And we do that, exactly that. And after the area, we do start chopping, going down back to the barrier, chopping, going down to the barrier, until finally we break out, right? But unfortunately, our original stop loss placement was actually right around 127 ticks, right? Around there. So we would have got wicked out, right? But I'm honestly not even considering this a loss because that is a stupid mistake that we have taken, right? First step to identifying where we should place our stop loss is simply understanding where this barrier is located, right? And another clear continuation signal of these longs, even through all this choppy action, was this right here. 2,112 iceberg orders being at fruition at these levels, and price continuing to want to push up, even though we're seeing so many sellers at these bottoms near these barriers, give us signals that the market may want to trap these sellers here, allowing for a bigger push towards the upside. Now, what was I gonna say? Yeah. So the first step to identify where we're gonna place our stop is comparing it to Bookmap, right? We see that this area is around 52.95, right? So where is 52.95? 52.95 is around here, right? It's around here. So to give it a bit of room, we should have kept our stop loss below the bodies of these candles, right? Leaving it an additional 20 ticks below that. So here we're at 167 ticks. So let's go to 187 ticks, and this should be where our stop loss should have been placed, with our 20 tick rule established within it as well. If that occurred, even with the retracements back into the barrier, we would have got exactly what we wanted, with honestly probably taking into account an institutional move that we would have caught. Originally, our target was towards these highs up here, right? But we cannot catch that, and we cannot expect to catch this as well, right? What we could have expected to catch was potentially this liquidity up here, but we did exit after seeing some invalidation signals, which I'll show you right here. Right here. What did we say happened? We saw so many seller icebergs start to get introduced, and even though buyer icebergs were getting introduced, we exited the trade because we were stalling at this level, right? And we exited, and right after that area of portion, we did start to see breakage down again. We typically don't want to be in there for all this chop, right? Because that would be like literally a 4-hour trade. And although we would have capitalized on more, we'd like to get in and out between a maximum of around 30 minutes, right? And this trade did exactly that. We got in before the buying pressure occurred with some confirmation of the buying pressure, and buying pressure came in like exactly how we wanted it to. This shows that barriers are very high confluence for confirmation, and that they should be used more heavily. Now, an area improvement could definitely be working on stop loss placement, because this is the second day of getting wicked out, showing that our analysis is correct, but our overall execution could work higher, So today, I am counting this as a winning trade in my books, but in reality, this was a losing trade, but that is okay. Now, one thing I also want to emphasize is let's take a look on ES again, right? Let's take a look at NQ as well, both on the 1 hour. We saw our longs happen, pretty good trade, right? Now, looking at the 1 hour, where's the 1 hour liquidity placed on NQ? It's placed all the way up here. The same thing on ES is placed right here. We're trading with ES liquidity analysis, right? So we could expect it to go up till there. This trade now, if we swung trade something like this, would have been a perfect trade, right? Let's literally analyze how much our risk to reward would have been on a swing trade like such, right? This truly shows the power of the analysis which we do here at V2 Trading, right? Place our stop, 70 ticks. And where do we target? We target liquidity up there. Oh, that's only a 3 risk to reward ratio. That's not crazy, but it's still great nonetheless. Right, so this overall upwards move on ES we could have caught on the second half of the day. NQ, the buy pressure did not match up with that structure at all. So this could be indication of continued selling pressure because NQ was unable to make those higher highs. And that's where I want to leave it here for today, right? We took a pretty good trade in terms of analysis, and I'm not mad about it at all. We saw and analyzed using point of control mean reversion, and we waited for confirmation from the barrier for us to enter in the longs. We saw our long buys through the liquidity sweep on ES, aiming for a higher liquidity level, hoping that there was no invalidation signals prior, but there was invalidation signals prior, and we got out for a clean move for a nice risk to reward ratio of around 1.65. Now, that's a pretty good day if I would say so myself. And that's where I'm going to end it off here for today. To learn these topics, to learn how to do stuff like this, there are many resources here within V2 Trading for completely free. First, you can join our Discord server where we have our progressive journaling programs and much more for you guys to learn from. And everything is completely free. We want to grow and build reputation as a company before we expand to even higher depths which have been unheard of before now. Additionally, within the YouTube channel itself, we have a 10-episode crash course that takes you through the main ideas and main topics that you need to understand for being a trader. We don't tie you in with one strategy. I want to emphasize that. I'll show you what strategy I use, but I never tie in my strategy and force you guys to implement that. Because I know that if you guys use my strategy, you likely will not succeed, right? Everyone needs their own twist to what they do. I used to be a purely supply and demand trader, trading like some other traders as well, right? Exactly how they used to trade. And this never worked out for me. Then I switched into involving some fair value gaps and using only that, right? And that didn't work for me either. Only when I started combining it and using order flow and other topics which truly resonated with me and I felt like they can actually analyze the market well, that's when I started making the most success. Whatever makes sense for your mentality, for your style of psychology and personality, that's what you should do. And it may take a good amount of time to find it out, but that's why I highly encourage you to start out with one strategy and truly work on that strategy. I'm not saying all strategies will work for one another, but I'm saying that if you can build off one strategy, you can succeed whether that be any strategy, right? If you're using supply and demand, if you add your own little twist to it, it can work for absolutely anyone. And that's where I'll leave it off here for today. You can leave a comment down below as well. I can answer your questions there as well. Thank you so much. This was episode 26 of the trade recap and market analysis recap session and overall series. And I'll see you guys maybe tomorrow. Tomorrow is a bank holiday, but I might see you guys tomorrow for an educational video or something of that nature as well. And I guess I'll see you then. Goodbye.